All right, hello everyone. Tim Davis coming to you guys with the market update, market review, and now it's time to look at the bigger picture because a pivot point, major pivot point, was just put in place within the market. So we're gonna start looking at the monthly charts to show you guys what the bigger picture looks like, and it looks like we are in store for um, a sustainable downtrend possibly. So I think every rally now is going to be met with some fierce selling. All right. Start off by looking at a monthly chart of the S&P 500. And I will point this out. See this long shadow here, which represented a pivot point. And then we've seen already starting the month off in August with the lower lows. I mean, with lower highs. So is it sustainable? We have to wait and see, but I do believe it could be sustainable. Look at the TTM squeeze already starting to show some negativity or some loss of momentum in the monthly chart. And we're only like 2 days into August already. Look at the full stochastics. It's already starting to switch, starting to show a possible sell signal. And look at the RSI starting to dip out of the overbought territory, starting to show some weakness and representing, signaling possible selling pressure. So again, the monthly chart is definitely starting to show a pivot point already in the overall markets and the monthly chart. So that could lead to much more downside in the near term and possibly longer term. I'm gonna show you guys some bigger levels. In fact, let's switch right now. Let's to a quarterly chart on the S&P 500, and you see this red quarter that we're starting to form right now. And even on the quarterly chart, if you look, you see some possible sell signals, even on the quarterly chart. Look at our RSI, like it's ready to dip out of the overbought territory. Look at the full stochastic, like it's ready to cross with a possible sell signal. And the demand percentage, like it's ready to dip out of overbought territory. And again, look at the current quarter that we're in. It's already starting to show some huge selling pressure to the downside. All right. I do have some targets, well, at least one target for now to keep an eye on, which would represent an area of support that I do think we will break eventually. So here is it. Go back to a monthly chart. Here's the first target. I do think we're probably going to come back down to test this particular target here, which is an area that we've seen some support with before in the past. So right around 48, just below 5,000, around 4,800. So I do think we could drift down towards that level in the SPX. While we're on a monthly chart, we'll switch straight to a Dow Jones. Here's the Dow Jones industrial chart, industrial average chart. And again, I do think we have seen, I'm starting to see a topping pattern in this market. I do think we start to see prices start to trend lower. Look at the RSI also starting to come out of overbought territory. TTM squeeze starting to show some weakness. And with the Dow Jones, I think we could even drift down all the way down to about 36,000 or just below 37,000. So keep that in mind as we trade throughout the rest of this year. I think we're going to see some bumps in the road, especially in August. The rest of this year, these next couple of months could be a very volatile quarter. And we switch to a quarterly. We start to see possible reversal with that long wick that we started to form already in August chart. Back to a monthly chart. So that was a look at the Dow Jones. Look at the S&P 500. Let's take a look at the NASDAQ monthly chart. And this is one that's more well-defined. You see a clear pivot from last month. Long shadow, long wick, and then we start to pivot. It's on the trend lower. RSI out of overbought territory for stochastics showing sell signals. Risk percentage showing out of overbought territory, and sell signals. TTM squeeze showing loss of momentum in the monthly chart. So, folks, I do think on this past week was the turning point. I do think we're going to start to see lower prices. Now, it doesn't mean we're going to not going to get balances along the way, because all that selling pressure we seen last week, it was a lot of selling pressure. So I do see some type of bounce on this coming week, but I think any bounce is going to be possibly met with some fierce selling. So just prepare yourself accordingly. Let's look at one more monthly chart. It's the Russell. Then we're going to look at some current time action. Oops, didn't want to do that. What in the world's going on here? I pulled up something that I want to pull up. Okay. All right, here's a look at our Russell monthly chart. And again, looks like we made it right to area resistance. And as you can see clearly, this is definitely an area resistance of Russell, because I'm going to show you something. See how previous in the past in the Russell, how we traded around that area for quite a bit. Multiple months in a row, we were stagnant around that level. That level showed to be a strong level of resistance, and then we pulled back. Well, lo and behold, we are right back at that level now. Right back at that level of resistance right now, which leads me to believe that we're definitely going to start to see some pullback on all across the board, in all markets, all major indices. I think we're going to start to see some pullback across the board. Here's some levels on the Russell to keep an eye on. First level resistance right around 20,000. So we can see price action drop down around 20,000. Next level, the support around 20,000. Next level, you can see price action jump all the way down to 17,000, close to 17,000. Then below that, right around 16,000. So those are some levels to pay close attention to for the rest of this year. Now, again, there was a lot of selling pressure on last week. So with as much selling pressure we've seen, we could definitely see some type of reversal, some type of short-term bounce. So let's look at a 4-hour chart and look at some possible points of reversal. Now, here's a 4-hour chart of Russell, since we start with the Russell. And I do think we could see a near-term bounce. We could see a little bit more selling pressure at the beginning of the week, and then a sharp reversal. We are very close to on this 4-hour chart, very close to the 200-day moving average, which is right around here. And look at the RSI in oversold conditions on a 4-hour chart. Oversold on a full stochastic, oversold on risk percentage. So I do think we can see some sort of a bounce. But look, again, remember the bigger picture. Bigger picture shows we are already in a serious downtrend. So any type of bounce, we could see a bounce up to this gap fill area. So we could see a bounce up to that gap fill area, and that will take us right back up towards the 50-day moving average. Then at that point, I don't think we're going all the way back up here. This is my opinion. We could see a fill in this gap possibly. Then if we do reverse, right back down, and then start to possibly create a lower low. So keep that in mind, folks. Any strong rallies, I do think we could see some strong rallies because of the amount of selling pressure that's taking place. We can see some strong rallies up to levels of resistance. Here, I think we can see a gap fill, possible gap fill, or attempt to fill a gap, then possible reversal again. So it could play out throughout the week next week, or we could see an immediate reversal back up to fill this gap and right back down. So we got to see how that plans out. But remember that the overall trend, I think long-term trend, I think is down as of right now, since we had a major reversal last week. But I think so. Any bounces, just be mindful, put your stop losses in place to be able to collect your gains, and you can make money both ways. When the markets turn so volatile and such a nature that we start to see now, you can make quick bucks on both sides of the fence. Ride it up, ride it down. I think the volatility is going to be here, and it's going to be extreme. So that's a 4-hour chart of the Russell. Let's take a look at a 4-hour chart of the NASDAQ. Again, here's a 4-hour chart of the NASDAQ. Again, a gap down. See, this pretty much was a bear flag right here, where we pretty much traded in a range. Then we broke that range, broke below the 200-day moving average on the 4-hour chart. Look at the 20-period moving average crossing below the 50-period moving average. Folks, this is all signs of continued weakness. So I do here as well. There's a gap fill area right here. We can see a little bounce. Gap fill area right here. We could see a little bounce. Somewhere around here, and then possibly another reversal to create another lower low. So again, I think the bounces at this point could be strong, but I think they'll be short-lived. So we have to see if that thesis pans out. All right, let's look at the 4-hour chart on the NASDAQ. Now let's take a look at the 4-hour chart on the S&P 500. All right, S&P 500, same here. Again, a lot of selling pressure on last week. Back down to a short-term level of support. Look at the RSI bouncing off of oversold territory. This percentage showing around oversold territory. Full stochastics. This percentage and full stochastics, sorry, around oversold territory. And then we look like we're trying to bounce off of the 200-day moving average. So could we possibly rise back up to fill this gap? That is a very big possibility. Again, I don't think we're going to be rising back at all-time highs for some time. I think these bounces are going to be met, because what's going to end up happening is, as we get bounces in the overall market, we'll see these moving averages starting to move down. And they're going to create a barrier for a rejection. So that's what I do think we're going to start to see, how the markets are going to start to trade and trend. All right. And I think that's all the major. Oh, but did we look at the Dow Jones? 4-hour chart. So Dow Jones 4-hour chart, same thing. It's like we are at right around a level of support temporarily. We could see a little bounce. Not much of a gap here in the Dow Jones, but there is a little gap. So you could see price action move back up slightly, maybe back up to the moving average before reversing. So, and while we're on big moves, let's take a look at a monthly chart, or we look at any other chart. Let's look at a monthly chart of the VIX. That's also showing us a big picture that you cannot ignore. Here's the VIX. Look at this monthly chart of the VIX, folks. I'm going to point out a couple of things. Look at the oscillators in RSI. It is on a tear, and it's straight up. Oscillators and full stochastics showing buy signals. Oscillators and wins percentage pointing straight up. TTM squeeze showing we are in a squeeze area, which means we're going to break either to the upside or to the downside. I think we're going to continue to break to the upside on the monthly charts. Well, on the monthly chart, I mean, next couple of months, we can see the VIX just continue to chop up, trend up. That's a big possibility. So keep in mind that the VIX on the monthly charts is showing major strength. And that's huge on the monthly chart, show major strength on the monthly chart. In the near term, is a daily chart of the VIX. And look how high we got, folks, almost up to 30. Before this long shadow, we'll start the VIX start to see a sell-off. I do think that as we do see a short-term bounce in the market, we're going to see a short-term rejection or short-term pullback in the VIX. And I do think the VIX could come back down to fill its gap. See the gap here? So around that level, you could see the VIX come down to fill that gap area. And I think once we fill that gap area, folks, I think the VIX is going to take off again and possibly surpass this level, folks. When I say we can start to see some major movement in the markets, I think time is now. We're going to start to see a lot of volatility. All right, folks. Hopefully this is some information that you guys can use. Until the next video, this is Tim Davis signing off. Again, be vigilant, be mindful, and be careful, because volatility is definitely going to be heightened. It's gonna be a heightened sense of volatility, I think, for the rest of this year, maybe right into next year. All right, folks, catch you guys on the next video.